The European Central Bank has put together a stimulus package to provide immediate liquidity support to the euro area's financial system. European shares dropped as fears about the economic hits from the coronavirus pandemic intensified. The ECB announced a €750 billion quantitative easing program and is now in talks with the Eurogroup finance ministers to try to find a coordinated solution.
The European Central Bank was initially criticised for a weak response to the COVID-19 pandemic. It was accused of being too hesitant in the early stages and being behind the curve, underestimating the damage the virus would do to both the Eurozone and the wider global economy.
Analysts say jointly issued debt or so-called corona bonds were the wrong approach to helping the struggling European economy. Instead, they say the ECB should buy large quantities of stimulus packages from countries like Italy.
German economic output this year will be at least 5% lower, and there will be a sharp recession. Anything else is whitewashing. The question is, when people are allowed to return to work, I understand the measures, but it's clear that those who collapse economically now will not get up again once the virus has passed.
The ECB's Governing Council also announced a new pandemic emergency purchase program. The program, which will be effective until the end of the year, amounts to 7.3% of euro area GDP. While it may be temporary, it is designed to address the unprecedented situation of ECB's monetary union is facing. This will be available to all jurisdictions and will remain in place until the coronavirus crisis phase is over.
We decided to add a temporary envelope of additional net asset purchases of €100 billion until the end of this year, ensuring a strong contribution from the private sector purchase program. That envelope, in combination with the existing asset purchase program, this will support favorable financing conditions for the real economy in times of heightened uncertainty. We continue to expect net asset purchases to run for as long as necessary to reinforce the accommodative impact of our policy rates and to end shortly before we start raising the key ECB interest rates.
According to the ECB stimulus package, it will offer support to banks lending to those affected most by the coronavirus. It will also support favorable financing conditions for the real economy in times of heightened uncertainty. The Eurozone-based interest rate will remain at 0%, with the marginal lending rate and deposit rate remaining at 0.25% and minus 0.5% respectively. Nothando Makutulela, SABC News, Johannesburg.